Hey everyone, and thanks for jumping back into the cryptoverse. This is your weekend premium video. Hopefully you enjoy the content. In this video, I at least want to start off by talking a little bit more about the social risk, mainly because it's actually dropping quite quickly. And as I said in the Telegram group earlier, I do think we'll probably see it bottom out sometime by the second or third quarter of this year, okay? Now, if you remember back to earlier this year, like back in March and April, if we go take a look at the social risk was still quite high, and even in May, you can see the social risk continue to sort of put in these like dead cat bounces all the way back up to almost zero point 0.7 risk, and then we also saw it go back up to about zero point 0.7 risk back in November as well. But what's interesting is that for a long time, the social risk was higher than the on chain risk and the price risk. But now we're seeing the opposite. So now finally, the social risk is getting a bit lower than the price risk and the on chain risk. And, it's only just below it, even though the price of Bitcoin actually went up quite a lot over a very short period of time. It's up like 40% or so over the last month or approximately. Okay. Now, I wanted to spend a little bit of time sort of deep diving into the social risk because it's made up of several different components. Okay. So the total social risk right now is primarily being held up by the YouTube views. Okay. If you were to isolate, say, the YouTube subs risk, it's essentially near zero. There's not a whole lot of new subscribers that are subscribing to these YouTube channels. All right, and this is not just my YouTube channel. If you're not familiar with what I'm talking about, you can go over here to the social media charts, go to YouTube subscribers, and you'll see a lot of various cryptocurrency YouTube channels, and you can follow along with new subscribers to these channels and kind of see, how are these channels doing in terms of getting new subscribers. You can always isolate me if you're curious. It's pretty quiet. It's pretty quiet out there in the cryptoverse right now. If you add all of them on here, this is what it looks like. Maybe we'll take a 30-day SMA just to clean it up a little bit. But again, from a social point of view, this is still, this is bear market activity. You're not seeing this bull market activity like you saw back in 2021, or even the early stages of 2021 or the later stages of 2021, right? It's just been more so the background noise that we saw in 2019 and most of 2020 and most of 2022, continuing on in 2023. So if you go over to the indicator dashboard and you go to the social risk, the YouTube views is not keeping it elevated, right? It's pretty low. And it pops back up occasionally, up to around 0.1 or 0.2. One of the reasons it'll pop up is when one of the larger channels, it's over 1 million. They only discretize it at that point in every 10,000 subs. So that'll just, it'll be quiet for a while. And then all of a sudden it'll just pop up to 10,000 new subscribers. And that's why you might see this pop up a little bit. If you go to the YouTube views risk, that's the main thing keeping it elevated right now. So not a whole lot of data to work with, admittedly. And I don't really think this is going to get all the way down to zero risk, although it might. But I mean, you can see that it's actually been somewhat resilient this year. I mean, sitting around 0.4 risk or so. I would suspect that it will continue to go down. Whether it makes it to zero risk, I don't know. It would have to get pretty bad, I think, for that to happen. But one of the reasons I think this will continue to go down is, we just had a 50% move by Bitcoin. If that's not enough to move to make it so that more people tune in, you have to think, what would it take, right? Like it would actually take an absolute enormous bull market to get people to tune in right now. If they're not going to tune in for a 50% move, it makes you wonder what's really going on. So the YouTube views risk is mostly what's keeping the social risk elevated. If you look at Twitter analyst risk, it's actually pretty low. And it's been low for a while. If you look at the exchanges risk, it's pretty low, right? And it's continued to move down. And, one of the reasons this one remains elevated is actually because I think, and this is followers to exchanges on Twitter, one of the reasons this remained elevated, if you actually go break this down, is because there was just one exchange that was just, I don't know if it was a marketing campaign or what, getting a lot of new followers on Twitter. But you might think this is just noise and not worth following. But on the contrary, I would argue that this is a sign of of marketing and thinking that those marketing dollars are going to be put to good work. Once you see a lot of that continue to dry up, and one of the reasons it might dry up is if they just think that it's not as worth the marketing efforts because people aren't converting or something, then you'll see that come down, and it has been coming down, right? I mean, just look at all of them combined, and it has been trending down with time. We could take like a 30-day estimate of it and maybe get a better glimpse of it. And that's what it looks like, right? So it has been trending down quite quickly. And so that is the new Twitter followers to exchange risk, right? So this one, it's been moving down quite quickly. Well, I mean, it's been slowly moving down, but recently it's moved down somewhat quickly. And then there's also the Twitter layer 1's risk, which again is another indicator that has been slowly moving down. It's also somewhat elevated at around 0.299 or so. So again, and each one of these is making up a component of the social risk metric. You might say, well, why is that one elevated? It's because, there's always something with one of the layer 1s, some big event going on. So one will surge for a while. But one of the reasons it's up is actually, if you isolate near, that one has actually been getting a lot of activity recently. I don't really know why. I don't know if it's because of a marketing campaign or what, but you can see that there's been a lot of new followers to that account on Twitter, and that's of course also keeping it somewhat elevated. But again, when you combine all of them and you try to filter out the noise, this is what it looks like. Okay, it's right now at 0.17, 178 risk, 0.178. For a long time, it felt like it was never going to get to these levels, and now we're finally at these levels where it's the social risk is finally coming down, and it's quite telling actually, because it's like we just had a 50% move in Bitcoin, and it's not really bringing new people to the table. If you're here, it's because you were here in the bull market, most likely, not because you just started tuning in because you all of a sudden found crypto interesting in the last month, right? So just wanted to provide some insight into social risk. And so that's hopefully not just this nebulous thing that you might not understand. The total indicator risk right now is sitting at 0.197. So still a lower high from what we had back in November, where it spiked up, but still at 0.197 and continue to slowly move along. If you look at it color coded, this is what it looks like, right? So again, over the long haul, as I've said before, for most, in most cases, a DCA approach is going to work the best simply because it allows you to scale in the market when it's undervalued, scale out of the market when it's overvalued, rather than trying to get too picky in timing a top or a bottom. Okay. And now I wanted to talk a little bit about this one too. So we're currently about 43% undervalued with respect to the fair value regression trend line. Remember, my expectation is that we will stay below this trend line for a majority of this year, if not all of it. I mean, I'm inclined to say we'll be below it for all of the year, but you never really know if you're going to get something like 2019 where it pops above it for a month or something. But I would say we're likely going to be in the undervaluation territory for a majority, if not all of this year. And that's why I still think that the altcoin market will be better suited to accumulation later on, because I still think most of them will bleed on their Bitcoin pairs specifically. I still think that's the case. And, this is one of those things where, like, whether you think the bottom's in or not, if you think the bottom's in for Bitcoin, then it still can take half a year more for altcoins to bottom on their Bitcoin pairs. And if you don't think the bottom's in for Bitcoin, then it's not even really a discussion yet for altcoins, right? Especially because most of them will bleed with Bitcoin or even more than Bitcoin. There's always a few that hold up strong, as we've seen. I mean, Matic is one of them that's held up strong. And Ethereum actually has held up relatively well. But most of them, like as a whole, most of them are bleeding on their Bitcoin pairs over the macro scale, especially during a bear market and then the following accumulation phase. It's only at the sort of as you get further into the accumulation phase that the altcoins finally tend to bottom on their Bitcoin pairs. Okay. So that's why I keep saying, like for the risk that you're taking on, I still think Bitcoin remains the better play rather than the altcoin market at this time. I have mentioned that Litecoin is likely going to be one that can outperform just in the short term, right? Do note that it did get rejected from this level in March of 2019, so it actually came back down to $65 or so. And we just come back up to that level again. It got rejected off the $100 level, back down to 65, and then it had a final move into June that took it all the way up to almost $150. But then the halving, which was in August, it was faded, right? So that's why I'm saying, like, Litecoin could continue to show relative strength for maybe the first and second quarter of this year, but it's still exposed to the overall market risk. And I would say the rally will likely fade 1 or 2 months before the halving. And the rally could fade before then if the overall market goes down, right? But if the overall market does not go down within the first 2 quarters of this year, you could still easily see that Litecoin rally continue on, but then probably start to fade it sometime by the end of the second quarter if it hasn't already started to come back down by before then. So just something to think about. If we take a look at the Ethereum Bitcoin valuation, it's currently at 0.071. So this is one of those things where it's over the long haul, it's been going sideways, right, for a year and a half. It's been holding support on this trend line for a long time. My expectation. I think it's going to break down. I know a lot of people disagree with that, and that is completely fine. My expectations on this one have I thought it was breaking down back over here, and it did in the short term, then it bounced back up to sort of give it another go. Now we find ourselves at a similar point, right? Is this going to bounce again, or is it going to break? I do think you're going to see it break here in the coming weeks, and I'm hoping again to see the dominance of Bitcoin continue to move up a lot. I did get a lot of questions about the Bitcoin dominance this week because it is pulled back down. But I do want to remind people that it has moved up a lot very recently. I mean, it was below 41% at the beginning of January, like a month ago, below 41%. So yes, we've had a pullback to 43% or so, but I don't really think it's that big of a deal. I do think the Bitcoin dominance will continue on higher. All right. Sorry, I'm actually sick again, so that's why if I sound different. But I do think it'll continue to push higher. One thing to keep an eye out here on, I think, is the dollar, because the dollar is, we've been talking about it. I thought it was going to bounce out of the 102 to 103 range. It did go just below that. We'll see if this is the bounce or not that we were hoping for. It's currently at 103.1. Still would like to see some follow through. I mean, this is a pretty impressive candle. Look at this weekly candle last week. It's a pretty impressive candle by the US dollar currency index. So we'll see if we can get that follow through this week. And of course, after the FOMC, the market is now saying, all right, well, maybe the Fed's right. Maybe the Fed funds rate will go higher than the market's thinking. And I mean, look at the rates. I mean, let's take a look at the 1-year Treasury. It's at 4.8%. We'll see where it is tomorrow, right? But they're moving higher, right? I mean, and this is one of the reasons why you need to keep an eye on TLT. So if the long end of the yield curve is moving higher, then you would expect things like TLT or ZROZ. You would expect those to move down. So these could be potentially good areas to look at if and when you think long-term treasuries have sort of hit their peak, right? So like if you think some of these if the long end of the yield curve has mostly topped out and is just going to go down, then you would probably also be in the camp that this has already bottomed. If you're of the opinion that it hasn't topped out, or maybe it'll go back and do a double top, right? Wouldn't that be something if Treasury yields double topped after Bitcoin double topped and basically everything else? So I would keep an eye on these Treasury yields, because again, if you are getting the risk-free rate somewhere, these are of course interesting to you. The 2-year Treasury yield right now is at 4.3%. The 1 year is at 4.8. The 6 month is at 4.8. 3 month is at 4.6, and the 1 month is at right around 4.6 as well. So Treasury yields continue to move higher. I was also looking at the Bitcoin dominance plus the Ethereum dominance, which is another interesting way to look at this chart. Sort of oscillates between 57% at the low end and 85% at the high end. I think that you're still likely going to see this breakout to the upside, probably mostly because of Bitcoin, not because of Ethereum. Ethereum might provide more juice to it later on, but I still think this, that we're going to get a move out of here, mostly because of Bitcoin, and then Ethereum might kick in a little bit more later on. This is my general expectation, and I'm trying to think if there's anything else. I mean, we did add some other macro charts. So if you're not familiar with those, we did add a few more. There's a lot of real estate charts as well. If you go over to the macro stuff, you'll find a decent amount of real estate charts. But we've also added the RGDP recession indicators. This is a new one that it sort of lags behind by a good amount. So I don't really know how useful it is, but the highest probability it has come to a recession was back in January 2022 at 37%. It's actually been dropping since then, but then this has only been updated, for July. Okay, so again, it's fairly delayed, but just know the indicator is there. We also added the National Financial Conditions Index, which really shows you, if you look at this bear market that the S&P has been in, right? When this is moving higher, the market is moving lower, right? So when financial conditions are getting worse, meaning this is moving higher, market's moving lower. When it sort of evens out, levels out a little bit, market goes up, right? Or if it goes down, right? So like here it's going down, market's going up. When this is going up, the market's going down. And really since October, the market's been trending higher, and this has been going down. So again, it kind of goes against what Powell said with, he said that financial conditions were extremely tight. They've actually been getting pretty loose. And according to this, they're as loose as they were back in the first quarter or so of 2022. So if this moves back up though, and we get into more of the restrictive territory, that's where you're typically looking at harder times for risk assets. But right now, monetary conditions still remain somewhat loose overall, and this might be a good indicator to just keep an eye on and see if it starts to turn back up, then that could be a clear indication that the markets are likely getting into an area where they can no longer sustain this move. Okay. And then going back over to I wanted to talk a little bit more about the crypto stuff. So the other thing I wanted to mention, and I think I talked about this last week, the running 1-year ROI is currently at 0.542, so it has dropped down here a little bit because we did have that rally into March last year. I think that, there's a good chance it's not going to go lower than 0.234. The only way I think it could happen is if you see crypto crash in March, then maybe it could. But if it doesn't happen then I don't think you're going to see the 1-year ROI go any lower this cycle. It doesn't mean that the price of Bitcoin can't go lower, but I don't think you're going to see this indicator go any lower. And so that would just be a point for the bulls, right? If it can't come back down any further in March, then I don't know that you're going to really get below this level, because we're just going to be comparing the current price action to where it was a year ago, but where it was a year ago was in a bear market, right? No longer comparing it to a bull market. We are now comparing it to sort of this brief rally right here. So there's still a chance it could come back down. But, after you get out past March, I think this indicator would still be, I think, a point for the bulls. And so it would be somewhat desperate, I think, to sort of assume that it's going to go below 0.2 if you don't see anything transpire after or before March, or before the end of March or so, or maybe early April. So I did want to remind people of that. And then the altcoin season index is actually still showing that it's Bitcoin season. It's kind of been oscillating a lot in here. If you take a look at, say, a moving average of it, say like a 30-day SMA, it doesn't really know what it wants to do. Kind of goes back and forth between altcoin. Maybe the altcoins are starting to show some strength, maybe not. Right now, it's still hovering near Bitcoin season. I'm still hoping to see it come back down deep into the green area, where I'm expecting altcoins to get crushed on their Bitcoin pairs. It could still be another few weeks before that happens, but I do think we are going to get to that phase. And we've been in that phase for a while. We're kidding ourselves to assume that altcoins haven't bled against Bitcoin. A lot of them have bled a lot against Bitcoin, right, over the last year. But the point is I still think many of them still have more to bleed against Bitcoin before they're finally done bleeding on their Bitcoin pairs. I think we'll go ahead and wrap it up there. Thank you guys for tuning in, and I'll see you guys next time. Bye.